Welcome back to Tech Check. Let's turn to the markets. Investors are the most underweight U.S. equities right now since 2005. That's the main takeaway from a new survey from Bank of America showing the streets fleeing tech and pharma, rotating into utilities, emerging markets, and Eurozone stocks. Let's take a closer look with Requisite Capital Managing Partner, Bryn Talkington. Bryn, good morning. I want to talk tech overall, but first, specifically, you like Microsoft, you like Tesla. I want to start on Microsoft because we got a guest later who hates it, put the only sell on Microsoft in the street, partly because of exposure to small business and the possibility of a recession. Why aren't you worried about that?
Well, I think small business and the possibility of a recession permeate probably through every business in America. And so, you know, obviously Microsoft has LinkedIn, they have Azure, they have Xbox and gaming, they have the cloud, they have Outlook. And so I really like all of the different verticals that they have. They're a leader, you know, along with Amazon in the cloud. They're well ahead of Google. And so I just think that as a company going forward, they have great management. I think Satya has just done an incredible job, he and his team executing. And so I think if you want to own a tech company, I think the multiple verticals you have here on Microsoft are solid. But if you have a recession that's not priced in, I think Microsoft is probably the least of people's worries at this point. So I wouldn't be taking that downgrade with too much, because I just think that would permeate, once again, across all sectors and so many other companies.
Okay, so you haven't been leaning too heavily into tech for the past few months. At the same time, you typically go ETFs when you do get into an area. How are you playing tech right now? Has enough of the hype come out of the market that now is a time to get aggressive again?
So for us, in December of 2021, we reduced the Qs. That had been our core exposure for tech that we had purchased in March of 2020. And in December of 21, the Fed told us they were going to raise rates. We reduced it. In hindsight, if hindsight, we were able to trade off that, we would have sold the whole position. What we did, though, in the summer is we fully sold the Qs, but then we bought another ETF. It's called JEPQ that buys the Qs, but it actually sells calls against them. And so John, why that's such a great strategy is because volatility in tech is high. And so the option premium selling those calls gives you an incredible amount of return from the option premium. So we don't think that we're going to have some V-shaped recovery in tech. And we think we could get more return from selling those calls. So we think it's a better way to play tech right now than just focusing pure on capital appreciation, which is the majority of what the NASDAQ is.
Right. And Bryn, just to go back, good morning, by the way, it's Deirdre, to go back to your Microsoft call. How did you take Satya Nadella's comments just a week or two ago when he said brace for more pain for, you know, at least the next 2 years, especially in tech? Do you think that he's optimistic on his company, on what the markets are going to do? Especially, you know, I hear a lot of folks getting more and more worried about the Azure business.
I think that he's definitely optimistic on Microsoft and the people there long term. But I think that we don't know. I mean, we don't know. Everyone, this is like the most anticipated recession ever. Everyone's planning for it. And everyone assumes the Fed is going to go too far and mess it up and cause a hard landing. And that's definitely a probability that you have to have in your allocation. So I just think if you're going to own an individual security, I'm a long-term investor in Microsoft. And so I would not be looking to sell a Microsoft in this environment. If anything, if it got cheaper, I would add more. And just to point on the Azure business, I mean, really you have Azure, AWS, and Google. I mean, if you look at Google, Google's a much cheaper stock, but 25% of Google's workforce is in Google Cloud, yet it's only 7% of the revenues. And if you look at Google Cloud as a whole, they're actually losing money in that space. And so I think Microsoft has done a good job managing Azure. They're still growing. That growth may be slowing, but relative to an Amazon, which I think is expensive, and Google, which is losing money in that space, I think Microsoft is where I want to be to own that cloud business plus the other businesses.
And Bryn, finally, just really broadly, we just heard from Citi CEO Jane Fraser. She said that she fears the market is a bit wishful in its thinking after an unexpectedly strong start to the year. Would you agree with that?
Probably so. I mean, we just hit the 200-day on the S&P We're about 5% away from the 200-day on the NASDAQ. I think unless you had the NASDAQ break out, the S&P is going to be challenged from here. And so I think it's a nice start to the year, but I wouldn't get too anchored on having this V-shaped recovery while the Fed is still in charge.
All right. Bryn, thank you.